Adel, just everyone knows Jetex, but every time I meet you, you've added 30 FBOs. How many does Jetex have now?
For the time being, as of today, we have 30.
30?
Yes.
And how big are FBOs to Jet Aviation?
At Jet Aviation, it's a big part of our business. We've got 50 locations around the world, of which there's 27 FBOs.
Okay, and I'm hoping at the end of this would have merged at least one of your companies. One of the things we've been going through the whole conference, one of the big themes, is that it's very hard, that lots of businesses aren't making a lot of money, operators are having a tough time. The FBO industry is like a hidden gem. Is that fair?
First of all, the FBO businesses keep, I'm talking about the region of Asia Pacific, Middle East, North Africa. I can see stability in the growth of the FBO. And just like to give you like a quick headline about our region. We have in Asia Pacific 61 FBO, which is like almost 19 jet sharing each single FBO. While in North Africa and Middle East, there is like 32 FBO, which means like 15 jet sharing each single FBO. While in US, there is like 3,500 FBO approximately, which means sharing each 4 jet sharing 1 FBO. You can see the difference in the market between these two regions. So to answer your question, we can see more FBO coming in our region. We can see stability and the growth in this business.
Dave?
So, as you know, I'm always a big fan of FBOs and their background and their ability to make money. They are a sort of tale of two halves. So there's size and scale, where there is financial opportunity, but that takes capital because of infrastructure needs, hangar needs, staying up with effectively having FBOs open 24 hours a day. You know, the aircraft don't come in when you want them to. They come in whenever they want to come in. And then you also get a whole range of very small FBOs, which effectively don't make much on a sort of dollar-for-dollar basis, but they'll still make a decent margin. But then there's a scale issue. If you go to somewhere like the US, you're right, 3,500 FBOs. I think something like just over 60% of all the fuel volume in the US is in the top 60 FBOs. So you get this real bell curve and tail off at the end of the chain. You've got to be in quality locations.
It's totally different business segment between US and rest of the world, because in US, the driving part is the fuel, which is like we are not sell it in our part of the world. And we don't see this will happen soon. So US part is a fuel driving. This is why you can see the major profit coming from the fuel, why we are not selling the fuel in our area.
And a lot of that's to do with the structure of the contracts, because in the US, with the owners of the airport or the region will give an exclusive contract or a number of limited exclusive contracts where you've got all the rights to take all of the revenue from your piece of real estate. But if you come to Europe and you come to parts of North Africa and the Middle East, the airports are generally shared resources, and effectively anyone comes onto your ramp and people come and make money on your customers. So your customers can buy from multiple sources, whereas in the US, they're a bit more captive.
I'd just like to add one thing. We can see a new revenue of the income of the FBO, which is like we are recently launching. There's a new business segment named CIB, which means commercial important person. When you are flying in private jet, just like you will use private jet to come to the airport, and then you use the FBO terminal. We start creating and generating a new business revenue out of CIB, commercial important person. You'll fly in commercial airlines, but you'll be treated as a VIP traveler in the business jet. We'll pick you up in a limousine car from your commercial aircraft, drive you to the FBO. You'll be treated exactly as like aircraft private jet owner traveler, and then we'll stamp your passport, arrange the luggage, full concierge service delivered to your home or to your hotel. It's a new business segment which already started. And we started maybe January recently, which started in Oman, and we hope to looking forward to implementing the rest of our location.
And if I'm flying through Oman, I just email you and you'll arrange that for me.
Yes, do it, please.
It's interesting, isn't it? Because there's a blurring going on between business aviation and commercial. If you look at Jet Suite X in the US, where they have aircraft which effectively feel like business jets with 20 passengers, or Jet Smarter, where, Jet Smarter, where it's sort of a blurring. How do FBOs cope? Because your primary customer is the guy flying in a G650 but when you've got, 20 people sitting in a terminal waiting to share a flight.
So, and to me, this is always a challenge for the business, because we're not necessarily set up for it. And there's a big difference between a guy who's jumping into a G650 and paying what he's paying, and someone who's paid $2,000 for one of 20 seats. And it's not the 20 seats, it's the 20 cars in the car park. It's the 20 people in the lounge. And how do you get that exclusive touch between a genuine corporate jet passenger and someone who's effectively on a high-end air taxi? So I think you will get some of that blurring of the lines, but it's how do you actually ensure that the experience for the customer is relevant to the customer group. And like Adel says, the CIP thing, we're starting to see more and more, where you get first-class passengers using FBOs and getting transited through airports. But again, there's a big difference between paying $10,000 on Emirates first class and paying $70,000 for your charter to the US.
Just like a business segment such as Jet Smarter or selling the seat, I believe this depends on the region. We can see this module very successful in US market, but we don't see very successful in our region, Middle East and North Africa. The people in the region, they will not accept, not all of them, majority, to share the airplane in the private jet business. This is why we see these concepts more successful in Europe and US market.
We had a fascinating, we've got a great question from the audience. We had Bernhard from Globair, I think, said that he was sending 3,000 emails a year to FBOs. Yeah. Is there a way to make communications with FBOs easier?
I believe the high technology, the advanced technology, what we are doing in our company, we have a full integration system with our customer, which the customer, they can communicate directly and online without sending any email. Everything depends on how they integrated between the customer and the FBO operator. And for sure, there is a many of FBO system in the market, which all of them is good. But what we are doing internally is just a pure full integration with the customer, which means they will not use any other system. They will use our system and integrate all the requirements online with our system.
And there's also a maturity of the market as well. So if you go to the US, FBOs are much more of a transit experience. The aircraft come and they go. There's no slots. There's no booking. People do book in, but not very often. So therefore, they trust the service to be done. What typically happens, we've got apps, we've got electronic communication with our customers. But typically, what will happen is someone will book the chairman in an aircraft, and the chairman will be coming in, and the PA is still going to phone up and say, is everything okay for the chairman? So there's always this traffic, whether we like it or not, because people are just sensitive to the level of the customers on the jet.
Okay, we started today with a session looking at standardizing charter. Someone in the audience wants to know, is it time for a handling standard? Go on then.
There is a handling standard, ISBA, which you've got ISBEO for the aircraft operations, and you've got ISBA for the handling operations. And that's focused, it's an IBAC product, again, non-profit for the industry, and you go through levels just like you do in ISBEO, whereby you work through the policies and process for safe and efficient handling, and you go up through levels depending on your adoption of it. And we're a stage 2 ISBA operator globally, and you are as well.
Yeah, I fully agree with you. ISBA is the right platform for this standard, and we are stage 2 as well, but not on our location, while Jet Aviation already announced last year about their stage 2 and the rest in all of the location. We keep developing the rest of the location to be stage 2 in ISBA, but I fully agree with David, this is the right platform to standard the handling.
So, where was the last FBO you opened? Can you remember? You're doing so many.
Just like the last one we did in Oman, we did the opening 19th of December. We will open Muscat and Salalah, and we will be there for the coming 12 years.
And do you remember?
Yeah, well, last year we took the 7 FBOs along with the Hawker Pacific deal, and then we opened Amsterdam and Rotterdam after that, and then we did a consolidation in St. Louis.
Okay, so on the whole, I get lots of press releases from you guys when you launch them, and they always seem to be in nice places. How do you decide on location? What are you looking for? What are you looking for when you're deciding where to launch your next one?
When we set up FBO? First of all, the main driver for us when set up the FBO, the location itself. How many fly there? Who is the operator on the ground? Are you going to be exclusive? Are you going to have like with another provider on the same location? And the most important thing to understand and to know the return of the investment. This is why we can see in locations such as Oman, they give us 12 years, Dubai 15 years, Paris 15 years. This is the main driver for us to decide about the FBO. In addition of that, for sure, as I mentioned, like how many operators on the ground, what the gross projection of the flight income. And we want to see if we can add, again, in our portfolio, if we can add the CIB service in this location.
So when you're taking a lease for 12 years, or what's the minimum lease you'd look at?
10, 12.
10, 12. It's a funny business, isn't it? Because
we want 30 to 50.
Yeah.
We do. That's what we want.
But you're leasing the land and you build your FBO, and you know it's going to take you time to. It's weird, though, isn't it? Because you're also building a business that you might not have in 10 years' time. You're making it attractive. You're trying to encourage business jet companies to fly into that FBO, and at the end of the 10 years, you've made it more valuable, the airport.
You give it back?
Yeah, and then you hand it back.
100%. In the end, the location that we select, it just like all the time is a capital, which is mean in our own way there's like a minimum flight to this destination, and we can see minimum flight of like 1,000 flight, and depends like any projection we can see like minimum of 1,500 landing per year. You can make your own coverage of the coast. This depends on our region. This is how we create this one.
And so for us, our bent and push on where we develop and how we develop is slightly different. You know, we've got 270 large cabin aircraft in the fleet, and for us, it's about servicing our customers. We've got to be the most relevant provider to the large cabin market. We've got an MRO business that supports it. We've got an aircraft management business that supports it, and these places need homes. The aircraft have got to live somewhere. So it's like you say, it's the top locations, but it's also where our customers want to be. And you know, there's this fallacy of build them and it will come. Well, they won't. Customers don't buy a jet and fly to an FBO. Customers buy a jet and they fly to where they want to fly to. So you've got to make sure you're at the most relevant locations.
It's a nice question from the audience. Outside of fuel and real estate, how do you evaluate an FBO? How do you decide where to go?
For me, because we are far away to consider as like a fuel station, I can see it's a pure real estate. We just block a slot. For example, we signed for Dubai FBO in 2007. We grabbed the facility in 2017. It took for us 10 years to be there. We applied for Morocco in 2015. We grabbed the location in 2017. So it's totally slot. If anyone will come today, ask for a slot, you will have to wait like 5 to 10 years. So for us, we can see the real estate business.
Yeah, and we start with where our customers fly. If something comes on the market, if an FBO comes in the market, the first thing we do is we look at the fleet stats, and we say what's all the connectivity of airports. So what's the major routes, who's the major customers, and then from there you look at what's the length of lease, what's the fuel volume, you know, what's the service reputation, and also the competitive landscape. You know, there's no for example, we look at somewhere like Paris. I'm not even sure how many it's up to now, maybe 9 FBOs. So you just can't make money. So at the end of the day, we're still rational investors. We've still got our stakeholders and our shareholders are still looking at us and saying, we'd like our money back at some point, please.
So we have a question. Do you see FBOs developing in Africa beyond South Africa, Nigeria, and Morocco?
We can see this happening in Algeria. Algeria will open their new airport this year. And there is a big opportunity to have like FBO there. So again, business aviation in this region depends on the expansion in the airport. You can see in our area, this like the FBO opportunity coming only when there's a new airport coming. What we're talking about, like airport in Dubai, Oman, Qatar, Jeddah. We are talking about Kuwait, Bahrain. And Morocco, when they built the new airport in Marrakech, they announced about the slot. Now in Algeria, they will open new airports. So we can see Algeria has potential to have FPO there. We can see one of the locations which is very important as well, which is like Angola, which has like a lot of traffic. In addition of Kenya, there is a good traffic in this region.
Okay, specific question. This is philosophical. Is Jetex an aviation service provider or an FBO chain?
We are one-stop shop, regardless if the customer asks for a flight plan, or asks like for concierge service, or asks for overflight clearance, or asks for like hotel booking, or FBO service, or fuel service. We are one-stop shop to arrange everything. We are one of the couple of providers in the world who are doing FBO and the flight support, both of them. This is why we have the privilege to drive the business to our FBO network. When we decided to go and expand our business from flight support to FBO, we had the chance to select between going and create aircraft management company or to go to the FBO business. But we decided to compete with our handler, not with our customer. This is why we are focusing more about the FBO. And because we drive the business, because we plan the trip for the customer. So we give them the choice to use our FPO. And we give them like one discount. You will use our FPO service, you will use our FPO network, we'll give you discount in the flight support and the FPO. This is how we can differentiate Jetex.
So you're a one-stop shop. One of David's colleagues has put up a question. Is vertical integration of jet aviation to the benefit of the small operator?
I think it is to the benefit of all of our customers. We have gone through a process of the last 2 years to the initiative's called OneJet, and we are aiming to be able to recognize and treat all of our customers the same globally. So that means whenever you come, for example, for an MRO quote, the only thing that varies realistically is the labor rates per country, and the thing looks the same, feels the same, you understand it, you're not getting variation. And also we have the ability now through investment in CRM to start recognizing customers globally as well. So the aim of that integration is to try and treat all of our customers the same, but treat them all globally, small and large.
We've got a specific question. I don't know why Dublin is in capitals and Shannon isn't.
Shannon, we're already there, and we have a partnership in Shannon, and we are doing very good business with our partner. Dublin, we announced last year, and we had like technical and some missing issue, which is the postponed fully operational. Hopefully within the first half of this year, we'll be fully operational there.
This is an interesting question. So last week, we saw Dassault buying the MRO business of ExecuJet. And then obviously we had General Dynamics acquiring Jet Aviation a few years ago. I'd also put in your acquisition of Hawker Pacific. Any comments on, are we going to see, Jet Aviation obviously already has a lot of FBOs. A few years ago, engine manufacturers were well into maintenance. Now every OEM is, are we going to see OEMs moving into the FBO space?
I think a lot of OEMs in the scale markets want to effectively be in charge of their own destiny. You know, they want to make sure that their customers are serviced. They want to understand that when they sell an aircraft, when the customers ask, can it be supported? Well, yes, it can. You know, the Dassault ExecuJet thing is interesting because obviously Dassault wanted the platform of managing the service experience with its customers. Within Jet Aviation, we maintain that we are an independent maintenance provider. We happen to have a sister company in Gulfstream, and we work closely with Gulfstream, especially outside North America. But at the end of the day, we are platform agnostic and want to remain platform agnostic. And we want to service customers. We want to service the OEMs and have relationships with them. And when General Dynamics bought Jet, they didn't just buy an MRO. They also bought a big completions business. They bought a staffing business. They bought an aircraft management business. So it was a wider, General Dynamics aviation or aerospace portfolio they bought.
Any thoughts on OEMs?
To be honest with you, just like we can see Dassault now is like involving in the MRO business internationally, especially after they acquire ExecuJet MRO part. We want to see like how this will impact the FBO business, and if like what's the next step out of this one? Because usually GE, like when they start with like Aviation, and then now Dassault and Execujet, we want to see what's next. Like, is it will be only for Dassault will do their investment and expansion only in the MRO, or will they will expand the FPO as well later on?
It's interesting, isn't it? Because as an OEM, you have a relationship with, in the past, you sold an aircraft to someone, they went off, maintained it, they came back to you and they bought. Yeah, maintenance makes a lot of sense, offering after services to an OEM. The FPO would be an interesting differentiator for an OEM to get into that market. You know, you fly into the Embraer FPO at Biggin Hill or Gulfstream FPO at Farnborough. Have you ever had conversations?
That's a no from me. I mean, it's you know, FBO is a fixed cost business, and therefore you have to be able to attract all customers from all platforms, all OEMs, and all types of customers, chain customers, individual customers, fleet customers. But at the end of the day, you're paying for your resources anyway. You're paying for what's there.
But it's a fixed cost, profitable business, so you could.
It also has a high cost of entry at the moment because of the valuations that are going on out there.
That's another interesting point. This is probably the hottest sector in terms of valuations. Are you finding it? How often do you go to a location you like and you're the only bidder for it?
Again, in our portfolio, in our own location, we made the acquisition only for 2 locations, and the rest it was only for tender. This is why we are trying very hard to be in key destination. But again, this depends on the slot and how you are strong financially to be in this location. So it's not matter of like if you want to be in this destination or location. It's matter of like how to have the slot.
And so what I see is that the market has just changed completely over the last 2 years. There's the whole profile of how people value and sell FBOs has just gone completely towards seller-friendly. So now whenever you go to a place, people are now, they do 2 things. One is they're trying to value on forward-looking earnings. So they're coming in saying, you know, I know that it only makes $1 million, but if you do this, and this, it's going to make 5, and therefore it's worth 50. You know, but it only makes $1 million. And then the second thing is that in bid processes, they're loading the other way on what the buyer picks up in risk. So when you get into a bid process, they're coming out with a stock purchase agreement, and they're saying, we want a fully marked up contract ready to go, and the source of your financing, and we want you to have rep and warranty insurance in place before you bid. And then what you end up doing is people are looking for very fast transactions with the buyer taking all the cost. So if you get a situation where there's 6 or 7 buyers, you're looking at something saying, look, are we really going to spend 30 to 50,000 doing all the legal work and everything for this one small FBO? And you end up in that kind of funny situation whereby there's a lot of private equity money out there, there's a lot of infrastructure money, so the trade buyers naturally get disadvantaged.
Do you agree, Adel? Okay. I think we can make this Dubai South Airport to something like 5 or 6 FBOs is a sustainable / profitable, not just Dubai South, but is Dubai South about going, in the future, it's going to?
You know, the main issue for Dubai South that they are planning to shift all the business from the international airport to the Dubai South within this year, which by 2020, they will have 90% of the entire business of Dubai to be in Dubai South. Dubai did last year 14,000 flights in both airports, Dubai South and International Airport. While Riyadh itself, they made 19,000 flights. So Dubai is a business city, while we can see the major driver for them is the aircraft in and out. There's not too many aircraft based there. For us, we can see in next year, the situation will be much better when the whole business will be shifted. Even now, there is a runway closure in 2 months from now, and we start receiving a lot of inquiry to move the business from the international airport to Dubai South. all overall, like if we achieve like 15,000 flight by 2020 in Dubai South, I believe this will be profitable for the operator there.
So we've got two really nice questions about data. One, why don't FBOs offer an app?
You can download it from the App Store. Aviation FBO app.
So that was a question from one of your colleagues.
Thank you, team.
Here's a question from Avinode. Will you integrate your costs into platforms like Avinode to get more detailed pricing? It's an interesting, when we talk about charter and booking it online, the FBO cost, the handling fee, the landing fee at the airport, it's all very hard data to get hold of, isn't it?
I think the pricing from FBOs is not that opaque. At the end of the day, you've got airport fees, which are public, and then you've got handling rates in Europe, or you've got fuel rates in the US. And again, fuel rates, if you go into any of the fuel websites, you'll see what roughly fuel's selling for. So effectively, you can build a picture of what an FBO cost would be in an operation within a broad spectrum.
For us, we can see the major issue in this part, like when you are selling one FBO network in all destination to all your customer, so you'll give them like one discount for all the chain of the network. So regardless how you integrate the prices for the customer, who is flying to your destination once or twice, has one aircraft flying regionally, is different the customer who using the whole chain for like 50 or 60 jet. This is the main issue for this part.
And it also depends what services they're buying, because effectively, FBOs are just a shop front. People turn up and they say, yeah, I do want catering. No, I've tankered. I don't want fuel. Yeah, I'm going to stay for a certain period of time. Oh, I'm going to leave the aircraft here. So it's a shop.
Okay, following on from the fact it's a shop, how important is it to offer guests a beautifully designed space?
We just we are focusing this part to make like a merge between hospitality and the aviation business. We are in the land side, we are pure hotel business. In the land side, in the RAM side, we are aviation business. So the customer will come to the FBO. This is our philosophy. This is how we see this one. The customer will come to the facility, same how they are coming to any 5-star hotel lobby. Check in and go to the airplane. Same when you check in and go to the room. This is the whole concept. So we want to change the concept. It's not only like the aviation. Yesterday, we've been awarded 5 stars in global star rating in our FBO in Dubai and Paris, which is the first company in the aviation who've been awarded a star on hospitality. And it's a big privilege for us to merge between these two businesses. So we believe like having the hospitality and the aviation in one FBO, this make major change in the industry. Because all the customer who's flying, having like coming even in limousine or helicopter, going to private jet, having $50, $60 million. So it deserves to continue their journey and to have for them one-stop shop with luxury services.
So effectively, you're building a hotel, but forgetting about the bedrooms.
And see, I'd have a slightly different view of this, and I think probably it's, especially for the Middle East culture, it's important. But what I see is that if customers didn't have to come through the FBO, they absolutely wouldn't. So we have to have consistent, efficient service. If you can get a car on the ramp, you get a car on the ramp. And generally people don't hang around FBOs for fun. They're important, busy. They fly privately because they can control the time. So they come to the airport when the flight's ready. They leave as soon as it's there. As soon as they arrive, they leave the airport. So normally they don't hang about FBOs unless something's going wrong.
Agree with you. Again, this depends on the region as well, and we can see this is required in our region, while maybe in US is different.
Are there opportunities to work with aircraft OEMs and engine manufacturers to offer more? Nope. Okay.
I don't really understand the question.
A nice philosophical question. The aircraft operator is the customer of who? The FBO, the OEMs, the financial institution. You have an operator.
We have, I think it is a customer of the FBO, as is the person in the back of the plane. But generally, it is the operator who chooses the FBO. So generally, the operator is the customer. The user is the back of the plane and the person that you satisfy, but the operator needs to be looked after.
Any old school questions or comments from the room? Okay, easy question. Where do you want to grow?
We want to keep growing in Africa, Asia Pacific, and Middle East and Europe. This is our region that we want to grow. We want to invest more in CIB business, which we can see relevant and another source of the income of the FBO. And we will see like big growth in this direction soon.
How many FBOs do you want?
We're still targeting 50 by end of next year.
David?
We have a target list of locations. I look at it kind of from a perspective of if there's 18 to 20,000 business jets in the world and 12 to 14,000 of them are in North America, that's where the financial volume is. Where do our customers fly? If you look at Europe, you've got nearly just over 50% of all the volume is in the UK, France, Germany, and Switzerland. So you've got a fairly finite. If you're focused purely on large cabin aircraft, from a European perspective, you've got a fairly finite set. In the US, 6 states have got 60% of all the traffic in all the airports. So the airports are relevant. So we don't want to be a 100 or 200 chain FBO. We want to be relevant to our customer base, and our customer base probably needs us another maybe 10, 15 FBOs.
Great. Any more questions? And I guess the final one. We've always had the last one, the final question, give or take. We've always had a different model in Europe and the US. The US model is going to change eventually?
It probably will have to, given, if you look at, I can't remember what the statistic was, but years ago there was a statistic that said that a Lear 31 versus a 7X could fly 4 times the passengers, twice the distance on half the fuel. And if you look at the efficiency of aircraft, you look at the biofuels and all that sort of stuff, electric aircraft, it has to change over time. The thing that does change significantly for how FBOs make money is size of infrastructure. If you go back 20 years and you bought a Hawker, it was a 50-foot box. If you go now and you buy a 650, it's a 100-foot box. So these things have 27-foot high tails, 99-foot wingspan. You've got to put them somewhere. So there's a much bigger emphasis in the future on the infrastructure supporting the aircraft and where they live, these expensive and valuable assets. And therefore, I think the fuel model has to change over time.
As you can see, in 1980, US had like almost 10,000 FBO, while today is 3,500 FBO. And the major reason of this drop is like consolidation that happened in the US market. And we can see like this drop is mean like the big company, all of us, we saw the acquisition, the recent acquisition that happened between Landmark, Signature, Aviation, all this big acquisition. This is why we can see drop. For me, I don't see there's a major change in the FBO concept in US, but we can see more consolidation coming in the industry, especially in the US market. And like having this drop from 10,000 to 3,500 since 1980 is a big indication about this one.
Great. Thank you very much. And coffee's outside. Thank you.
Thank you very much.